From the studios of Farm Journal Broadcast, this is U.S. Farm Report.
Welcome to U.S. Farm Report this weekend. I'm Tyne Morgan, and here's what's in store over the next 60 minutes. Under pressure, how crumbling commodity prices are producing a bleak profit forecast on farms across the U.S. But one area where farmers could cash in, solar.
The rates we've seen are anywhere from as low as $500 per acre up to, I think the highest one I've legitimately seen is probably close to $4,000.
The controversy over the push for more solar on farmland. You may enjoy avocados, but have you ever seen them harvested? We're off to California. Plus a wheat harvest that's cause for celebration. The woman running 90 years strong. Now for the news. Expected big crop numbers this season has economists forecasting negative returns for both corn and soybeans. University of Illinois ag economist Scott Irwin posting his latest calculations on X via Farm Doc Daily. This is based on potential crops in Illinois. With an average yield of 227 bushels per acre for corn at a price of $450, when factoring in costs and a $359 per acre cash rent, the farmer return is negative $110 per acre. However, returns are positive if there's no cost for land. Just 2 years ago, farmers could expect a positive $332 per acre return due to higher prices. And on the soybean side of things, with a yield of 72 bushels per acre and a price of $11.30 per bushel, returns are forecast at negative $57 per acre. Irwin admits this is just a starting point and every farming situation is different. However, he says, quote, unless something dramatic happens on the supply side and soon, the great bull run of corn prices that started in August 2020 is over, end quote. So what does this all mean for land values? Well, real estate experts tell us a lot has changed in the ag land market in the last 12 months. They say while the market shows resilience, it's finally cooling off after 5 years. And there are several things contributing to that, including lower grain prices. According to Farmers National Company, the market is showing signs of settling, including single-digit decreases in specific areas, including the eastern Midwest or in the West where there are irrigation water concerns.
Over the past 12 months, we've definitely seen a change in both volume and value. And across the industry, where other real estate companies are seeing the same thing, that they're maybe anywhere from 20 to 25% down in total listings. And the value of those listings have definitely settled and in isolated cases have even declined.
Yet, while farmers may not see the record sales of the past few years, Shattuck is still optimistic about land being a great investment. He says this is a fairly normal pattern for values, which have stair-stepped but overall appreciated over the past 25 years. The weather making headlines this week after Hurricane Beryl came ashore in Texas, followed by a dangerous heat wave on both coasts. The storm leaving well over 1 million people in Texas without electricity, while searing temperatures reached into triple digits in several places. The life-threatening heat wave also scorching most of the western U.S., buckling roads in Washington state. We also had high heat in the east.
You kind of get a lot of movement and there's a lot of product flying around and things getting broken.
From heat to the threat of flooding in the Midwest and Northeast as remnants of Beryl moved across several states from Missouri to Maine. And it wasn't just rain, but hail had devastating effects this week. Take a look. Several fields in the central portion of the state were hammered by hail. Storms passing through the area last weekend with 70-mile-per-hour winds in some places, along with golf ball-sized hail. Kent Getz of Morgan Genetics traveling through one of the hardest hit areas, which is Eagle Grove, which along with the hail saw about 5.5 inches of rain. Fourth case of avian flu in humans was confirmed in the U.S. The Colorado Department of Public Health and Environment confirming the case in an adult male. They report he had mild symptoms, reporting only pink eye. They say he is an employee at a dairy farm in the northeast part of the state and had direct exposure to dairy cattle infected with H5N1. Health officials continue to say the risk to humans is low, and there is no evidence right now of any human-to-human transmission. Well, Google is exiting ag. A parent company to Google is getting rid of an ag tech subsidiary under its umbrella. The company is Mineral CEO saying the company will no longer be with Alphabet, but that its technology will live on inside of agribusinesses where it can have maximum impact. Mineral was founded in 2018. It was part of the moonshot factory of Alphabet. Mineral helped develop and build an image database of 117 crops in every stage of growth in several environments. It also created a four-wheeled semi-autonomous rover to collect data from fields. From heat to a hurricane, it was another big week of weather. We'll have a check of weather coming up next with Matt Engelbrecht.
U.S. Farm Report is brought to you by Pioneer.
Ben's bins, please hold.
Yeah, Ben's has been busy all day.
Seems like no one can keep up with this new Z series. What did you all put in these seeds?
Science.
U.S. Farm Report weather is brought to you by H&S Manufacturing. Maximize baleage yield with less time and effort with the LW1100 line wrap bale wrapper. You can wrap round or square bales, and the automatic operating mode allows for a one-person operation.
Well, from heat to a hurricane, it was another big week of weather. Matt Engelbrecht joining us now for a look at the upcoming week's forecast. Matt?
Here's a look at that updated drought monitor. Now, this does not include some of the rain from Beryl. Remember Beryl, that tropical system that we had earlier in the week? Speaking specifically towards Illinois, Indiana, Ohio, up here towards Pennsylvania. That does not include the nearly 4 to 6 inches of rainfall from Beryl, but down here into Texas, Louisiana, and up towards the north, it does include that. So we're seeing much better conditions in and across the United States with regards to the drought. Still, as we go through the weekend, while this is showing in a drought through North Carolina and Virginia, specifically on the East Coast, severe to extreme, there is some promising data that would suggest the rain that has come down the last couple of days would help alleviate the drought conditions, at least by the East Coast, as we have seen some soaking rainfall. Check out the drought monitor next Thursday to see how that shifts. That will include some of that heavier rainfall we've seen the last couple of days on the East Coast. As otherwise, we zoom a little bit closer to New Mexico and the Big Bend area of Texas. Still extreme to exceptional drought for those locations. Estimated rainfall the next 7 days. We got a weak clipper system that's going to bring some rain back here towards parts of the Midwest. Notice that we're staying away from what we had with Beryl, which is the 3+ inches of rainfall with this. It's more of 1 inch to 2 inches of rainfall into Illinois, possibly even in Missouri, as well as Indiana. The more heavier downpours is where we're hoping that they push a little bit more to the west, and that includes more tropical moisture. Not exactly a system, but there is some tropical moisture opening up the Gulf of Mexico, leading to some higher rainfall totals in the next 7 days. Your jet stream looks something like this Sunday, Monday, and Tuesday. A ridge of high pressure. There's that weak clipper system that I was just talking about. So this is Monday, Tuesday, and Wednesday. It could bring some rain into Wisconsin, Illinois, Indiana, and Michigan, as well as slightly cooler temperatures as well. Otherwise, baking under the heat back here towards the south and the Four Corner State. That big circle is going to keep moisture at a minimum and temperatures at a maximum in those locations, and we can't really get much in the way of relief in the northwest, where temperatures are going to be staying well above average even into next Thursday, Friday, and Saturday.
From hail to too much rain, we possibly saw some crop damage this week, but the market doesn't seem to be focused on that. We'll take a look at that, plus talk about the recent USDA reports just out Friday. That's with Pete Meyer and Joe Vaklovic next. Welcome back to U.S. Farm Report this weekend. As promised, we have Joe Vaklovic as well as Peter Meyer joining us. All right, Joe, looking at these reports, these WASDE reports for July from USDA. USDA not really touching the new crop forecast for corn or soybeans. Yield left at 181 bushels per acre. Production forecast at 15.1 billion. Soybean yield pegged at 52 bushels per acre. No surprise there, but we did see some changes to ending stocks for old crop corn. Joe, what were the biggest surprises for you out of this report?
USDA posted substantial increases to its old crop demand forecast, which is something that came totally out of nowhere. The June 1st stocks numbers, which we got on June 28th, would have indicated that the old crop carryout number was going to go up, and it actually went down. So this was, as a matter of fact, it was about the most friendly report you possibly could have received from USDA today. They added hundreds of millions of bushels of demand. A lot of it was old crop. There was a little bit of it in new crop. I think it's overall kind of, I mean, relative to expectations, it's a friendly deal because that demand that they added for old crop, that's real demand. Everything on the new crop balance sheet, you know, the yield, the acres, the demand, that's all smoke and mirrors. That marketing year hasn't started yet. But the old crop stuff is real and you could take it to the bank. The reaction in the market to this point, the market's still trading as we're taping here, but the reaction was poor and could have been better. But make no mistake, I mean, it was friendly relative to what it could have been.
Yeah, to follow up on that, USDA raising both exports and feed usage for old crop by 75 million bushels, and then feed usage another 75 million for new crop. So those were some changes that were made. But Pete, as Joe mentioned, this was about as friendly of a report as we could get, yet the markets aren't acting that way.
Yeah, I can accept the feed number up 75, the export number up 75, and corn to me is very questionable. But I think, you know, the markets, as Joe suggests, this is probably the best report we could have gotten if you're looking for any upside. But one of the more telling things to me is that I always look at year-on-year supply versus demand, especially in corn. There's a very high correlation between changes in supply and changes in demand, not production, total supply. Supply now from the 23-24 to 24-25 year is up 270 million bushels. Demand is up 50. This is very telling to me because typically during the year, they will adjust that by 50%. And we did a 25-year study where actually the correlation is probably closer to 85%. But the fact that they did not use their 50% rule and increase demand by 135 and only increase it by 50 suggests to me there's very little confidence in their demand numbers. Me personally, I don't trust the demand numbers at all. I mean, I would have thought that they would have increased the demand, but when I talked to our clients, I didn't know where they were going to increase the demand. That goes back to that. I don't trust the demand side of it. And on the soybean side, Tyne, you know, carry out was 460. Carry out was 435. I have 460 is our number. And the reason for that is that I have exports at 1.8 and they have exports at 1.825. Again, we did get a sale of soybeans this week to China, but you want to look at the book doesn't look very good to me.
Well, and you look at these adjustments to the balance sheet, but the fact of the matter is, Joe, when you look at the amount of grain being stored on farm right now, corn, the highest level since the 1980s, what does that mean for price action moving forward over the next few months?
The general narrative among traders and analysts is that the market cannot rally in a material fashion until that stuff is sold, right? I don't know if that has to be the case necessarily. If you see demand enter the marketplace in a material fashion, and I think it's got to be on exports, I think that's where it has to come from. I think that's what could move the needle real quickly. If somebody, China, somebody along those lines comes in and decides that they really want to buy U.S. corn, we're competitive on the export market. I mean, things could change quickly. They could. And the old crop carryout situation, it's not 2 billion bushels. It's going to be closer to 1.9 to 12.6% stocks to use ratios with being projected for old crop. That's not the most bearish thing in the world from current price levels. I'd probably argue, if anything, it's friendly from current price levels. The new crop situation, yeah, it's probably bearish, but the new crop marketing year hasn't started yet. So, I mean, I still think overall this report today, it was a friendly item. Is the on-farm stocks thing, is that friendly? No. But, I mean, we got some good news today.
Okay, Pete. So as you look at the fund positions, you look at the amount of corn being stored and grain in general being stored on farm right now. What is the battle right now between the funds and the amount of grain farmers are holding on to?
Well, the funds really don't have a fundamental view, to be honest with you. They are still trading the path of least resistance, and the farmers are holding on for higher prices. So let's say for argument's sakes, I agree with Joe, and this is a friendly report. How friendly can it be? 4.25, 4.30. Is that going to get the corn out of the farmer's hands? I don't know. So, I mean, the funds will keep selling it, or they'll stay short until such time that the farmers capitulate. Funds are not stupid. They saw that 3 billion bushels. They know what's going on.
Well, when you look at some of the carry-out changes, you mentioned soybeans. We're looking at new crop corn, 2 billion bushels, wheat, 856 million bushels. I mean, there were some changes there, but still we have this debate about yield. So when could USDA possibly adjust yield? Will it be to the upside? Will it be to the downside? We're going to ask Pete and Joe that next. Welcome back. Joe Vaclavic and Peter Meyer joining us. All right, we have this yield debate, that we will get into. But, Joe, the question a lot of farmers are asking right now is, we had this massive hailstorm go across the areas of Nebraska, Iowa. I mean, we had some large crop damage this week, but the market seemed immune to that news. Why?
Well, first off, you can't quantify it. You can't quantify how many acres and how many bushels were damaged or destroyed by hail. Similarly, you can't quantify what was damaged or lost in the floods that we saw in northern Iowa, southern Minnesota, Wisconsin, places like that. The trade can't quantify it, and I think the trade is very clearly, given the action in the market, the trade is of the opinion that it just wasn't big enough. And maybe that's wrong. Maybe down the road you see acreage adjusted lower. Maybe the yield losses in those locations are enough to drag the national yield lower. But on the flip side of that, you've had essentially perfect weather over the last week in parts of Illinois, Indiana, Michigan, Ohio, places that caught the rains when it was needed, like perfect timing, perfect placement. There's going to be record crops in a lot of areas of the Eastern Corn Belt. So the question is, do the big crops out east, are they able to offset what could be lighter crops in the Western Corn Belt?
Pete, Joe mentioned it. We had crucial rains this week from the hurricane. You think it's going to be a negative thing, but for the Eastern Corn Belt, it brought some much needed rain, and a lot of areas, including talking to farmers in Illinois, it soaked into that soil. So when you look at the rain coming at such a crucial time, I mean, how big of a crop could we be talking about this year, Pete?
Joe and I talked about this about 3 weeks ago, and Joe put me on the spot, and I said I'd be between 178.5 and 179.5. I'll stay there. I'm not a 180 plus guy at the moment, but I'm certainly no chance of being below 175. And as far as the acres are concerned, I've reduced our acres by 250,000 in corn and 250,000 in beans just because I had to do something. So, outside of that, though, no reason to change the bean yield to 52. USDA, you knew they weren't going to change the corn yield to 181. Can it go higher from here? But certainly we have to think about 180 in the picture.
Okay, so if it is 180, Joe, what's your advice for farmers right now who have a lot of old crop still stored in the bin?
I don't know if I have advice. I can't fix a bad price, but I'll tell you this about the balance sheet. I think the production side or the supply side of the balance sheet, like your acres and yield, that is much less interesting to me than the demand side of the U.S. balance sheets. I mean, given everything we know today, the pace of export sales in particular, USDA might be overstating corn and soybean demand by like hundreds and hundreds of millions of bushels. And that's a big, big problem. It's a big, big problem. So, I mean, the corn yield could be 180. It could be 176. If we don't start to see an improvement in export demand, especially in soybeans, but also in corn, I mean, I don't know that 2, 3, 4, 5 bushel difference is necessarily has to be super bullish if it ends up on the lighter side.
All right, Pete, Joe, thank you for joining us. We need to take a quick break, and then we'll have Tractor Tales next.
Hey, folks, a real treat for you this week. Tractor Tales, we're headed to Illinois to check out a John Deere 4000 diesel.
I have a 1972 4000 power shift. My son's got interested in collecting a little bit too, so we went to a Mecum auction, and there was 2 tractors we were interested in, a 2520 power shift and this 4000. Well, the 2520 I thought brought too much money, so we ended up buying this one. Brought it home, and he's taken on a couple tractor drives and stuff like that. Now, this one was pretty much completely restored when we got it. I changed the battery boxes because the ones that came on it weren't the original ones. So I changed them so they're the correct ones and put the correct mat on it. And other than that, I don't think we've done much. We had an injector problem with it once, but other than that, not much. It's a diesel power shift, so there's not a lot of them. There's probably less than 250. I don't know exact numbers, but there's just not very many of them, so it's a little bit rare. If it was gas, it'd be even rarer yet. The 4000 was supposed to be a cheaper model than the 4020. It was like $900 cheaper, I believe. People in them days, I guess, didn't have the money, so they bought the 4000 instead of the 4020. It's just odd that it's a power shift because the power shift costs $900 extra, so you wouldn't think they'd buy that one without and then spend the money on the other. Because I started collecting power shift tractors, so it's just the next one in the line. It'd probably go 18 mile an hour down the road, maybe. That'd be top speed. I'm gonna need a bigger shed. I've been investigating that lately too. It's like collecting anything. You run out of space in a hurry.
We've talked about it before. There's a surge in companies looking to lease farmland for solar projects, but the rates farmers in one state are now being offered are in the thousands of dollars per acre. A look at those eye-popping rates and why. That's next.
You're watching U.S. Farm Report. Trusted, timely, tradition.
What if you were offered $4,000 per acre to lease your ground, and the contract wasn't just 2 or 3 years, but 20 to 40 years in length? It'd probably be difficult to turn down, right? Well, those are the eye-popping rates some farmers in Illinois are now being offered for solar energy projects, as we show you in this weekend's Farm Journal report. Lush green fields, corn already pollinating across the U.S. A mid-season checkup on corn shows the potential for a monster crop. And even with crumbling commodity prices, land values are actually holding steady.
Buyer demand is still very strong. There's a huge appetite for agriculture land, whether that's from farmer operators or whether that's from investors. And so those are the factors when you're looking at it from the landowner's perspective that are going to help sustain values.
Farmers National Company's real estate division covers 29 states. Paul Shadig, Senior VP of Real Estate, says demand remains strong, but there's also less land coming up for sale.
Across the industry, we're finding that there's anywhere from 20 to 25% less land listings available.
Land values may have plateaued for now, but Shadig warns if corn prices remain below $4, a decline in land values could be on the horizon next year.
We're kind of almost at a tipping point. I think we could see that land market retract pretty significant. First, we're going to see it in less demand.
More than commodity prices, higher interest rates, and the pain from inflation is also working against land values right now. But one area that's beefing up competition is the growth of solar leasing on farmland. Todd Jansen is an ag lawyer based in Indiana. He says solar leasing started in the Hoosier State 5 years ago, but today it's gaining traction and some controversy.
One of the common themes is that these are really long-term leases. So farmers are used to 1 to maybe 5 year cash rent leases, and these are 20, 30, 40 years. So they're really a generational decision that needs to be made.
Jansen has looked at numerous leasing contracts for landowners, and the rates are all over the board.
The lowest I've ever seen is $500 an acre, and that was really low. It's normally, I would say, anywhere from $1,000 to $2,000 in that range per acre per year over the life of 20 plus years.
Purdue University's latest Ag Economy Barometer showed 16% of respondents say they discussed leasing farmland for solar energy within the last 6 months. And as for rates, 69% said the rates they were offered was $1,000 per acre or more, up from 27% who responded that way a year prior. And 27% of respondents in the latest barometer say they were offered a rate of $1,500 per acre or more. But in Illinois, farmers are reporting eye-popping offers. One farmer near Morton, Illinois, sent us this unsolicited letter that he received. The company offered a rate of $3,200 to $4,500 per acre, plus another $1,000 if the farmer signed a letter of intent, along with $3,000 upon signing the cash lease. So where is all this money coming from? During an interview last month, AgriTalk's Chip Flory asked Agriculture Secretary Tom Vilsack if the Inflation Reduction Act is being used to bankroll some of these eye-popping lease offers.
From a standpoint of the individual farming operation, the REAP program basically pays 50% of the cost of the installation. There's a tax credit that will give you another 40% of the value, so 90% of the cost of an individual solar operation, a windmill, things of that nature, can be paid under the IRA.
Are you hearing concern from the countryside about taking some very productive farm ground out of production for the solar farms?
Well, there's always that concern, but the reality is that that's not as prevalent as it may seem. Less than 1% of the land currently engaged here.
The push for solar on farmland is creating attractive prices for farmland owners across the U.S., but at anywhere from $500 to $4,000 per acre, it's also causing concern about what it could do to cash rents and land values in those areas.
That's going to put upward pressure on cash rent, and it's probably going to put upward pressure on land values, given that it's local. And so it probably impacts a fairly local area, depending on whether your area has solar leasing or not. But it certainly has pretty wide ramifications on what's going on in production agriculture.
Jansen says in Indiana, as these solar companies are offering a very lucrative cash rent for solar compared to what the market would pay for raising grain, there is growing interest among farmers.
I think that's one of the surprises is that we used to see it was a lot of landowners who weren't really in farming anymore. But anymore, we also see a lot of farmers who just think, let's take 100 acres and put it into solar so that we can diversify our income stream.
Whether it's Indiana or Illinois, the Eastern Corn Belt has been ground zero for solar companies looking for farmland.
If you look at the map and how concentrated the population is as the farther east you get, I think that's probably a big part of it. There's more metro areas that they can feed from those solar fields, and the farther west you get, the more unrealistic it becomes.
But whether the lease is for a few years or up to a 40-year agreement, there's no guarantee the money will be there for that long.
Of course, there's always risk that the rent won't be paid, and then you'll have to try to foreclose on the solar company. We haven't seen that yet, so that's great.
Yet Jansen points out there are still risks.
I think the biggest risk right off the bat is that once you sign it up, that land is going to be tied up for years and years and years. So you're giving up any other opportunities that may come along, including maybe another solar company that comes a year from now and is willing to offer an even better rate. And I think there's some risk too on a personal level. These are becoming somewhat controversial at the county level. And so it can divide neighbors and counties, which is unfortunate, but it's also a reality.
With commodity prices under pressure and solar cash leasing rates sometimes thousands of dollars per acre above other cash rent prices in the area today, the financial incentive to even put 50 acres of farmland into solar is high.
I think the biggest opportunity is just the dollars you can make from this. And you can almost think of them more like an investment or like a mutual fund or some sort of annuity, right? That pays a good return on an investment on this land over years and years and years. So I think that's why we see farmers diversify their income streams with these.
There's no doubt the push to find farmland for solar could be a game changer, some for the better, but others for the worse. But for now, one thing is apparent, the race is on.
I had an industry expert say, within the next 3 to 5 years, if it's going to be leased, it's going to be leased. If it's not, it's not. And if incentives don't stay in the market, it'll get stopped dead in its tracks. So that'll be the big player there.
Now, Jansen's one piece of advice for farmers: before entering into any solar leasing contract, it's worth hiring an attorney. He told me, look, I know this is coming from a lawyer, but when you look at the dollars involved, we're talking millions of dollars over the course of a lease. So it only makes sense to invest a few $1,000s up front to have an attorney go through that lease in detail. He says typically these lease contracts are anywhere from 15 to 20 pages long. All right, when we come back, a glimpse at ag around the globe. That's next. Now for a glimpse of ag around the globe, India is set to surpass China as the leading driver of global food demand over the next decade. That's according to the United Nations Food and Agriculture Organization. China accounted for 28% of the demand increase in the past decade, but is forecast to drop 11% over the next decade. And India's share is projected to rise from 13% to 20%. For staple foods like wheat, China is expected to consume 147 million tons in 2033, a modest 2.6% increase from 2021 to 2023 averages. In contrast, India's wheat consumption is expected to jump 27.7%, nearly matching China. Another reason is rice. Rice consumption in China is projected to remain steady, while India's demand is set to rise significantly over that time. These updated forecasts are driven by China's declining population and India's impressive growth. An influx of imports of used cooking oil from China, and whether it's actually used, is stirring up quite the controversy here in the U.S. But cooking oil in China is also now a point of contention after investigation from Beijing News found fuel tanker trucks were used to transport cooking oil without proper cleaning. China's State Council has now initiated an investigation into the report. The investigation from Beijing News revealed that some tanker trucks were transporting edible oils immediately after carrying chemicals, such as coal-based oils, without adequate cleaning, and that posed significant health risks. The practice of using the same tankers for both chemicals and edible oils is reportedly a cost-cutting measure employed by some companies. This has led to widespread public outrage and calls for thorough investigations and stricter regulations to ensure food safety. The controversy has reignited concerns about food safety in China, highlighting the need for robust regulations and enforcement to protect consumers and maintain the integrity of the food supply chain. When we come back, there's a sense of urgency to get the Farm Bill done this year. But can it happen? Well, there are mixed views in Washington. Chip's Corner is next. Welcome back to U.S. Farm Report this weekend. Chip Flory joining us for Chip's Corner. Chip, when you look at the ag economy right now, really there are some concerns. When you look at commodity prices where they are, hearing a lot more concerns from farmers, from ag lenders, and seeing a lot of comments that not only are we seeing commodity prices where they are, but we're in this position with no farm bill in place.
Right. Yeah. And some of the improvements that are needed to the farm bill, we don't have those in place. Now, those are some of the improvements that are focused on in the House version of the bill that has passed the committee. So we've seen a little bit of progress on that, but not nearly enough. Now, we recently had a conversation with Senator Jerry Moran from Kansas, and he remained optimistic that there would be a farm bill effort that would be after the elections in a lame duck session of Congress. I don't know. Maybe Senator Moran was being just a little bit too optimistic there. Now, this last week, we had a conversation with Senator Joni Ernst from Iowa. She's a little less and maybe a lot less optimistic that the farm bill is going to be taken up in a lame duck session of Congress. And as a matter of fact, Senator Ernst suggested that there's another reason why it might be slowed down.
If we feel that we will be holding the gavel in January of next year, then of course, Senate Republicans would much rather wait, where we can actually strip out a lot of these pet projects that deal more with the Green New Deal rather than the farm. We would like to see a lot more for our farmers. For heaven's sakes, Chip, it's called the Farm Bill.
Yes, it is. It is called the Farm Bill. Now, I do want to stress that Senator Ernst did say, listen, if we could move a bill that looks like the House version that passed the House Ag Committee, they would move forward with that. That is also what the framework of the Senate bill would look like, according to Ranking Member John Bozeman. But we had a conversation with Randy Feenstra from Iowa about the Farm Bill. They just came out of a committee meeting on Wednesday of last week, and he's not very optimistic that we're going to continue to move this forward. He would like to see the Senate go ahead and push forward, but when basically all we've got is bullet points from Senate Chairwoman Stabenow on what the Farm Bill should look like, and you can't move forward on bullet points. You just can't. You got to have the full text.
That's a good point and a good reminder. Yeah. We still do not have the full version of the Farm Bill from the Senate Ag Committee, correct?
Right. That is exactly right. We need that before we can move forward. Now, over in the Senate, they're saying, hey, let's go ahead and encourage Chair Thompson to take it to a floor vote. And if they can pass the farm bill through the entire House, well, then that would put more pressure on the Senate. But that's a tough thing to do with the Senate so far behind.
Well, what I'm gathering from your conversation, Chip, is are we going to see a farm bill this year? It's a game of politics. Anyone knows, anyone's guess. You talk to different senators and they have different ideas on when we're going to see a farm bill. Well, Chip, thank you for those discussions.
I'm losing optimism, Tyne.
Yeah, well, you and me both. Thank you so much for those
You bet.
comments. Thank you for that. I really appreciate it. Chip Flory, host of Agri Talk. You can catch him weekdays at 10 a.m. Central as well as 2 p.m. Central. All right, we need to take a quick break. And you may enjoy avocados, but do you even know how they're harvested? We are going to take you. It's a trip to California to an avocado grove next.
Watch Markets Now with Michelle Rook on the Farm Journal YouTube channel, keeping you updated throughout the day on the markets at the open, midday, and close. Find out what moved the markets today and what to expect the market to do next.
The United States produces an average of about 400 million pounds of avocados each year, and most of those avocados are grown in California. It's a hardy crop and one that's handpicked, as we show you on a trip to California this week.
An avocado bin weighs about, full of avocados, about 940 pounds thereabouts.
A trip to sunny Corona, California, just outside of Palm Springs. And you'll quickly discover harvesting avocados is a special feat.
So I'll go as high as the machine goes and, bring the trees down and get the fruit. It goes into my chute.
It's not an army of people who harvests this avocado grove each year. There's only one. Jackie, who you see here, harvests 90 to 95% of all the avocados in this grove each year.
It has a pole saw, which I do all my pruning.
Unlike other perishable crops, avocados are a hardy fruit with a longer shelf life.
I think something cool about avocados is that you can leave them on the tree. Like some other crops, they require hard pick dates, say corn, soybeans. Growers miss that window due to weather or anything, and that can be catastrophic. Where I think something that's really cool about avocados is the perfect incubator is the tree itself.
John Dimitri is the Vice President of Business Development here at Index Fresh. He says growers can leave the avocado crop on the tree for an extended amount of time in order to watch the fruit size up.
But then I think the cool thing about avocados is that, they have a protective skin in itself. Unlike, say, stone fruit, where you could pick something and let it ripen up and take a bite out of it, avocados are just a naturally dense, protective piece of fruit that continue to win people over year after year. And so I think, in terms of how avocados are grown, how they're harvested, they're very labor intensive, and it's just amazing, as you saw Jackie today doing some harvesting, the passion that people have for avocados.
Harvesting avocados here isn't for the faint of heart. Some groves are flat, while others feature a hilly and often steep terrain.
It's a very labor-intensive job. At other ranches, harvesting crews come in, they could be 8 or 10 guys, and they're using 30-foot extension ladders, carrying bags coming around here, around their midsection, filling up with 60 to 80 pounds of fruit, and climbing back down an extension ladder, then dumping it in the bin and going back up. So to say that those people aren't athletes and able to carry around 60 to 80 pounds and go up and down a ladder all day and hold a picking pole would be an understatement.
Dimitri says the crop this year looks good as harvest will run through August, and production outlooks beyond even the U.S. are also promising.
Imports are something that I think, avocado producers, maybe earlier on years ago were a little fearful of. But actually, having more fruit available has really increased household penetration, because earlier, when California avocados had their crop, a lot of that fruit never really went too far east. Or if it did, it was in very small volumes. Mexico and Peru and Colombia have really helped put fruit in the hands of consumers who may have not normally purchased avocados, but now have been able to do so.
Whether it's avocados grown right here in the U.S. or fruit from around the globe, he says there is a hunger for avocados from coast to coast.
The demand for domestic avocados is extremely high. People like the locality of it. People like supporting, U.S. grown product. The timely and speed of which that avocados can be harvested, ripened, and distributed within the U.S. has been a real win.
Packed with fiber, vitamins, and healthy fats, the growing demand is now a bright spot for California ag. Listen, I don't know what Jackie gets paid, but I'm telling you right now, it's not enough. When we come back, a farmer in Kansas celebrated her 90th harvest. From the Farm is next. Well, how many years have you been harvesting your crops? No matter the number of years, harvest is often a time of celebration. But in Kansas, it was an extra special harvest this year as it was one farmer's 90th. MKC, a co-op in central Kansas, sharing this photo on X this week. Barbara celebrated her 90th wheat harvest this year. MKC says Barbara stopped by one of their elevators to celebrate with her granddaughter, who is actually a counter and scale specialist with MKC. How special is that? I'm going to need Barbara's secret to her youth. She looks amazing. Well, that's all the time we have this weekend. We hope you join us next weekend as we work to build on our tradition. Have a great weekend, everyone.
U.S. Farm Report is produced and distributed by Farm Journal Broadcast.